$15.7 billion in cash. Unilever is treating McCormick like a giant ATM.
Oh, come on. They're creating a $20 billion flavor behemoth. It's not just a cash grab.
Maya, they're taking the money and planning to slowly sell down their remaining stake. That is a textbook exit.
Fine. But I need the footnotes on how McCormick actually finances it. Speaking of massive price tags, Apollo is buying KKR's private jet parking lots.
$10 billion for Atlantic Aviation. Let's see if the math actually flies. The rundown. So Apollo is basically just buying KKR's hand-me-downs at this point.
Hand-me-downs that cost $10 billion.
Right, the Atlantic Aviation deal. Private equity titans trading private jet parking lots. It is the most banker deal I have ever seen. I feel like I pitched this exact trade back in 2012.
It is literally passing the parcel. KKR gets to cash out, Apollo gets to own the tarmac, and we get a rumored $10 billion headline before the week closes.
Speaking of heavy lifting, ClassPass parent Playlist just finalized their $7.5 billion merger with EGYM. Smart Fitness meets Class Booking.
I read the integration plan. It perfectly illustrates that new RGP report that just dropped. They are warning about a massive human value gap in recent deals.
Wait, human value gap? Is that just HR speak for everyone quits after the merger?
Basically. RGP noted that buyers are doing rigorous financial integration but totally underinvesting in human systems. You can staple two fitness tech companies together on a spreadsheet, but if the product teams hate each other, your $7 billion synergy is zero.
Fair, but I still think the smartest deal of the week is way smaller. Primoris buying Pinecrest Electric for $422 million in cash.
Ah, yes, the data center play. Pinecrest does the heavy electrical work.
Classic pick and shovel strategy. Everyone wants to build AI data centers, so Primoris is buying the guys who wire them. Brilliant.
Brilliant, but $422 million is steep. They are paying a massive premium for a regional contractor.
You have to pay up for the footprint. Data center capacity is a bottleneck. It is worth every penny.
I disagree. I looked at Pinecrest margins. Primoris is pricing in 5 years of perfect execution. One supply chain hiccup on copper wire and that valuation collapses.
You are allergic to optimism?
I am allergic to overpaying, just like Carlyle dropping over $2.8 billion on MAI capital management. Wealth management roll-ups are getting ridiculously expensive.
Okay, but none of these numbers compare to the absolute monster we need to talk about next.
You mean the $20 billion spice rack?
Exactly. Unilever is carving out its foods division, merging it with McCormick, and walking away with $15.7 billion in cash.
And leaving their India operations completely out of it. The structure on this is wild. I want to pull apart exactly how they are financing that massive cash component. The big one.
I just keep looking at the structure of this thing. It is a masterclass in having your cake and eating it too.
Or having your Hellmann's mayonnaise and eating it too.
Exactly. Unilever is combining its foods business with McCormick to create this $20 billion global flavor behemoth. But the mechanics of the payout are just wild.
Yeah, Unilever gets $15.7 billion in cash right at closing. Plus, their shareholders walk away owning 55.1% of the new combined entity.
As a former banker, I have to tip my hat. They get immediate liquidity to the tune of nearly $16 billion. They keep upside exposure, and they plan to just slowly sell down that direct stake over time. It is a beautiful exit strategy.
See, you are looking at this purely from the seller's perspective. I am looking at McCormick and wondering who approved this. Why on earth are they agreeing to this structure? They are basically acting as a high-interest ATM for Unilever.
Because scale matters, Maya. You combine McCormick's spices with Unilever's massive global packaged food portfolio, and you get unprecedented pricing power with the big grocery chains. You own the center aisle.
Do you though? Because if you actually read the carve-outs in the press release footnotes, Unilever is specifically excluding its India operations from this entire transaction.
Wait, really? They kept India?
They kept India, which just happens to be one of the fastest growing consumer food markets on the planet. So McCormick is paying an absolute premium, handing over majority ownership, taking on massive leverage to fund a $15.7 billion cash payout, and they do not even get the growth engine.
Okay, keeping India is a wildly aggressive flex by Unilever. I totally missed that. But McCormick still gets European and Latin American distribution channels they could only dream of before this week.
Maybe on paper. But you know what happens when you smash a legacy spice company and a corporate packaged food giant together? Total chaos. There was an RGP report out this morning about the human value gap in recent M&A.
Oh, the cultural integration warning.
Right? Rigorous financial integration means nothing if the human systems fail. You have McCormick lifers suddenly clashing with Unilever executives who know their parent company is just waiting to cash out.
You are so deeply cynical today.
I am data-driven. Unilever is already telegraphing that they are going to slowly unwind their stake. They are treating this new $20 billion company like a rental car.
Hey, sometimes a rental car gets you exactly where you need to go. And speaking of getting where you need to go in style, private equity is trading luxury toys again.
Are you talking about the Apollo rumor?
$10 billion for KKR's Atlantic Aviation. I want to talk about why Apollo suddenly wants to own private jet terminals. Voices. I'm reading this note from the market watchers on the Unilever McCormick deal, and they're calling the structure a masterclass in liquidity. Unilever takes $15.7 billion in cash right off the table, but keeps upside exposure by slowly unwinding the rest of their stake later.
Upside exposure, please. That's just banker speak for we couldn't find a single buyer for the whole thing at the valuation we wanted.
Oh, come on. It's a brilliant hedge. You get a massive pile of cash today. Your shareholders get 55.1% of the new $20 billion flavor behemoth. And you don't look like a motivated seller dumping assets.
They are a motivated seller, Nate. They're explicitly planning to sell down that remaining direct stake over time. Calling it upside exposure is just top-tier PR. Plus, look at the new RGP report that just dropped.
The human value gap note?
Exactly. RGP is warning that all these complex carve-outs look flawless on a spreadsheet, but they fail because of underinvestment in human systems. You're mashing together McCormick and Unilever Foods, two totally different corporate cultures. The financial integration is rigorous, sure, but people integration is where the value actually bleeds out.
Spoken like someone who's never had to build a synergy model at 2 a.m., we just put a negative 5% friction buffer in row 42 and call it a day.
Which is exactly why I don't trust your spreadsheets. And speaking of friction, the whispers say Unilever specifically carved out their India operations from this deal. That tells me they know exactly where the real long-term growth is. They aren't giving McCormick the keys to that particular castle.
Fair point. I'll be watching the regulatory filings tomorrow to see exactly how McCormick is actually financing that $15.7 billion cash component.
You and me both.
But speaking of massive cash piles changing hands between titans, my phone has been blowing up all morning about Apollo and KKR trading private jets. Spill the tea. $10 billion for private jet parking spots. You've got to respect the hustle. KKR bought Atlantic Aviation, held it for 3 years? And now they're just flipping it to Apollo.
It's the ultimate private equity circle of life. Apollo buys from KKR. Next year, Blackstone buys it from Apollo. They're just passing the same assets back and forth and charging management fees along the way.
Oh, come on, that's not fair. There's real infrastructure value there. You control the fixed base operations. You control the billionaires. I bet the Apollo guys flew into an Atlantic hangar on a Gulf Stream just to sign the term sheet.
I'm sure they did. But let's talk about the real drama. Unilever carving out its food division for McCormick. Did you catch what they deliberately left out of that $20 billion flavor behemoth?
The India operations, completely walled off. Which is fascinating because that's arguably their highest growth market.
Exactly. They're taking $15.7 billion in cash right now, giving their shareholders 55.1% of the new entity and holding on to India. But here is what drives me crazy. They're planning to slowly sell down their remaining direct stake over time. It's a total half measure. Just rip the Band-Aid off.
No, I completely disagree. It's a brilliant hedge. You get immediate liquidity, you get $15.7 billion to play with, but you keep the upside exposure to the McCormick machine.
It's a distraction. You have RGP putting out notes warning about the human value gap in these deals. Underinvesting in human systems ruins integration. How do you integrate two massive food cultures when the parent company has one foot out the door and is actively planning its escape route?
Look, $15 billion in cash smooths over a lot of human value gaps. You can buy a lot of trust falls and corporate retreats with that.
You are impossible, and you sound exactly like a banker right now.
Guilty. But you know what we need to look at next. Tomorrow, the regulatory filings drop for this McCormick Unilever combination, and I want to see exactly how they're financing that massive cash component. Tomorrow's radar. I'm refreshing my terminal tomorrow morning strictly for this Apollo and KKR handover. $10 billion for Atlantic Aviation.
You just love when private equity guys trade private jet infrastructure.
They're trading FBOs like baseball cards. I just need to see if they actually ink it before Friday.
I'll be watching something slightly less glamorous, the McCormick and Unilever regulatory filings.
We already know the split. Unilever shareholders get 55.1%.
Yes, but I want the exact financing structure for that $15.7 billion cash payout. You don't just find $15 billion in the couch cushions.
It's McCormick. They'll syndicate a massive bridge loan, standard playbook.
In this rate environment, a $15 billion bridge is not standard playbook, Nate. I bet the footnotes show some painfully expensive debt hiding in there.
Fine, but Unilever taking the cash while keeping their India operations entirely separate is brilliant. Immediate liquidity, maximum upside.
We'll see if the math actually holds up when the filings hit Edgar at 6 a.m. tomorrow.
I'll bring the coffee.